So something big shifted in the Cardano ecosystem back in early 2026. It's like they flipped a switch. After years of this super careful, almost academic-style development, the network suddenly pivoted. Hard. We're talking about a new era, a high-stakes era of just pure execution. And in this explainer, we're going to dive deep into what that really means for one of crypto's biggest projects.
And you know who set the tone? The founder himself, Charles Hoskinson. And he used this powerful, almost brutal phrase, a death march of shipping. Just think about that for a second. It's like he was saying, forget the white papers, forget the slow, methodical research of the past. The message now? It's simple, it's urgent, build, launch, and deliver. Right now.
Okay, so what is this execution phase really? Well, think of it like this. It's like switching from designing a race car to actually driving it in the Grand Prix. All those years spent building the perfect decentralized governance model, that's over. Now it's all about putting that machine to work. We're talking deploying the Treasury's capital, shipping real products, and just flooring it through the technical roadmap. The theory part is done. The high-stakes practice, it has officially begun.
And look, this isn't just a bunch of talk. The first major test of this whole new phase, it came almost immediately, with the community getting to wield its new power to make an absolutely massive decision about the Treasury.
70 million ADA. I mean, just let that number sink in. In one of the most significant on-chain votes in its entire history, the community just voted to deploy a huge chunk of its treasury. But you know what? The real story here isn't just the size of the check. It's the incredible strategic precision of where that money is headed. You see, the community didn't just throw money at the wall. They acted like a savvy strategic investor, specifically targeting what was called the liquidity gap of 2025. This capital is being deployed with surgical precision. We're talking funding for native USDC and USDT, integrating top-tier oracles from Pyth, and building these absolutely crucial bridges to the rest of the crypto world. So yeah, this isn't just spending, it's a really calculated bet on growth. And what's really remarkable is how this all went down. This wasn't some squeaker of a victory. It was a total landslide. We're looking at over 85% approval from the delegate reps and pretty much unanimous support from the Constitutional Committee. I mean, for the very first major test of its new governance model, Cardano absolutely knocked it out of the park. So, what's the big takeaway here? The crucial point is this. The vote proves that decentralization isn't just some buzzword on Cardano anymore. The community, through its elected reps, now has direct control, real ownership of the Treasury. They're the ones deciding where the money goes and what gets built. It's a huge deal.
All right, so with the governance engine just firing on all cylinders, the focus now pivots, right? It turns to the main engine itself. Cardano is undertaking this massive technical upgrade, basically re-engineering its core technology to compete on pure speed and performance. And the centerpiece of this whole upgrade is something called Ouroboros Leios. Now, the best way to think about it is like moving from a single-core processor in your old computer to a crazy multi-core supercomputer. It's a total overhaul of the consensus engine, and it's designed to do one thing: dramatically boost transaction throughput without ever compromising on decentralization. That's the key. And the scale of this ambition? It's honestly staggering. We're not just talking about a little boost here. The target is a massive leap to somewhere between 1,000 and, get this, 10,000 transactions per second. That's the kind of quantum jump that puts Cardano in an entirely new league of performance. And this right here is what that ambition looks like in the real world. Cardano isn't just trying to be a little bit faster. It's aiming to stand shoulder to shoulder with the fastest chains in the entire industry. We're talking the likes of Sui and Solana. This upgrade, it's their direct challenge for the performance crown. But of course, right, a faster engine needs more fuel. So how is Cardano planning to fill up the tank? Well, it's by building these new bridges to bring in fresh liquidity and entirely new capabilities into the ecosystem. And this is being spearheaded by two major projects.
So on one hand, you've got Midnight. That's Cardano's privacy-focused sidechain, and it just entered its final stable testing phase, which is a big step. And on the other hand, you have Sundial, a protocol that's pushing really hard to bring Bitcoin liquidity directly into Cardano's DeFi world. So you've got one bringing privacy and the other bringing the industry's biggest asset. Pretty smart combo.
And listen, this isn't just some theoretical expansion plan. There is serious capital backing it. Midnight's native token, which is called Night, commanded a $1 billion valuation way back in late 2025. And that was before it even launched. That's a huge vote of confidence in the potential for private dApps on Cardano.
Okay, so
New governance, a new engine, new bridges. The big question is, right? Is anyone actually noticing? How is the market reacting to all this activity? Let's go ahead and check the scoreboard.
Well, the market's initial response seems pretty loud and clear. In just the first week of January 2026, ADA surged 24%. That's compared to Bitcoin's 5% gain over the same period. So yeah, it definitely seems like investors are taking notice of this new execution phase.
Now, if we dig into the on-chain data, we see the total value locked, or TVL, sitting at around $183 million. And you might look at that number and think, that's kind of low compared to some rivals. But that figure is actually part of a very deliberate strategy.
Right. The official strategy is all about converting what they call low TVL into high utility. The whole philosophy is that just having a bunch of money locked up doing nothing, that's just a vanity metric. The real goal is to make that capital work. You want to make it efficient, make it productive, and that's exactly what these new Treasury-funded integrations are designed to do.
And the current leaders of this ecosystem, projects like the MinSwap DEX and the lending protocol Liquid Finance, they're already established. They're the ones who are perfectly positioned to capitalize first on this new wave of liquidity and utility that's about to start flowing into Cardano. Which, of course, brings us to our final question. The community now controls a fully funded treasury. The network's core engine is being rebuilt for elite-level speed, and new bridges are being built to bring in both privacy and Bitcoin liquidity. So the question we're all left with is, has Cardano's long-awaited breakout era finally officially begun?